We're live. Still spinning a little bit there. Hey, what's happening, financial coaches? It's Pete. Hopefully, we're live here without a problem. Hey, I wanted to do something a little bit different because I was about to sit down and record some videos, and I thought, why not just hit this one up live because this one's a little bit more lighthearted. So, one of the things, actually, kind of as an aside, if you are doing financial coaching and you are doing this on your own and you are doing it virtually and from your house and you're starting your own business, probably one of the drawbacks to that, from my opinion, is that you probably don't have a lot of opportunity to swap war stories like I have been able to when I've been working on a team and managing people and been a part of a program, and we have a dozen financial coaches. You just get a lot of different stories, examples, lessons learned. And so that's probably something you're going to miss out on. And I thought, why not share some of the ones that I've come across over the years? Now, I will say I have anonymized these and I have changed some of these things so that you can't figure out who it is. I've also kind of done some what we call compositing, where we take a couple people who are very similar and the point is always the same. So, none of these people really exist, or you won't be able to figure them out at least. And I just thought I would share a few of these because when you have done financial coaching for a number of years and people of different backgrounds and geographic locations and companies and employment and value systems and all these other things, you get kind of this pretty broad spectrum of people. And so I thought I would just share. Well, it looks like I wrote down kind of 6 that I kind of remember in particular that I thought were kind of interesting. So see a couple people online. Thanks for joining me today. So I thought I would just hit them up. If you have some interesting war stories, feel free to throw those in the chat. Would love to hear what those are. The first one I'm going to talk about is what I call the couch potato. And this is a gal, I'm going to call her Leslie, and I'm not going to say it in every story like I'm going to call her. I have these fake names. So I was working with Leslie, and I just noticed that from a budget standpoint, she just didn't splurge. She had a pretty cheap apartment. She didn't have a fairly big line item for eating out and entertainment and going out and all these other things. Her financial picture was in a pretty good spot. She didn't have a lot of income, but she didn't have a lot of expenses. She was living within her means. And, we kind of got to this point where, we started doing some tweaking without changing her lifestyle. And I said, what's the one thing, Leslie, you do a pretty good job here. What's the one thing that could add some value to your life or that you really want? And her answer was, well, because I don't have cable, one thing that I really would love is a Roku. I'd love to be able to turn on TV and actually watch something. And I said, all right, well, what's a Roku cost? And she's like, well, the basic one, I don't have a high def television, but maybe like $25. And so it's kind of funny because you do all this work, and sometimes some people have a $25 goal. So we figured out how to put that in her budget. And I can just say that within a pretty short order, she had her Roku. And I think that was adding a lot to her life, her evenings, her weekends. Now she could stream some live television or some recorded television and stuff. So that was a pretty nice, easy win. Some people are just not in the habit of having anything that falls in that luxury category fall onto their spending list. So sometimes as a coach, we need to break people out of the norm of not splurging at all. The next one I will call the balancing act. So Cliff actually called because he was worried about credit card debt. They had some credit cards. It was becoming kind of hard to manage. When actually Cliff came in, he actually brought his wife too, because they were basically on the same page. So Cliff and his wife were sitting down, and one of the first things you got to do when you're tackling credit card debt is take an inventory of what they I had my pad of paper out and I was asking, what's this credit card at? And they were like, okay, we've got the XYZ credit card that has $1,500 on it. We have the store card that has $600 on it. And, and we're kind of going through, and then we can start getting to some of the big ones. This one has $44,000 on it. This one has $70,000 on it. By the time we were done, we were just a little over $170,000 in total credit card balances with varying interest rates. That was kind of a surprise to me, but probably the most surprising thing was once we got that, hey, you're about $173,000 here. The reaction was not what I thought it would be. The reaction from both of them was, thank goodness. We thought it was going to be a lot. And so it's just kind of interesting that, it was a reminder for me that there can be very different perspectives on things. And again, it's not for me to project my values to that. But what I realized what we had to do is where I think a lot of people would look at the totality of that and be really worried, and that their blood pressure almost dropped because of it. Their stress level dropped when doing that exercise. That it was my role in this was probably to add some urgency, to have them look at the costs of doing this, look at the reasons why their kids wouldn't have some of the things that they did. So really a lot of this was now kind of trying to explore and kind of build up the pressure and put some pressure on them to really start getting proactive about it. The third one here I will call the beneficiary. So I sat down with this a fairly young girl, Samantha. She had just finished school. Her father had recently passed away. She had a stepmother. Her mother had passed away years earlier. She had a number of siblings. And in the will, the father left everything to Samantha. And she was wanting to sit down because she was trying to figure out what to do. This was something that she was not totally uncomfortable with, but not totally comfortable with. And she was getting a lot of pressure from her siblings as well as her stepmother to disclaim, to waive her rights to the inheritance so that it could be dispersed equally between them. So, I didn't know the whole backstory. I got a little bit of detail of probably there were some reasons that the father did what he did. I think he put some of those details in the will. Samantha was clearly the favored child of them, but we just kind of talked about what some of the options were. I didn't give her legal advice, but I knew what she could do in this case. So we just kind of ran through some scenarios, let her kind of think that through. Were there ways that she could feel good, feel like things were equitable without relinquishing her rights to the inheritance? Ultimately, she was going to meet with an attorney about it. And I think, it sounded like she was happy with resolution. It sounded like the family got some resolution as well. So kind of an interesting scenario, one that I hadn't had to deal with a lot in the past. All right. The next one I'm going to call the barista. And Julie was an interesting young lady, vibrant, funny, charming. And she had been married to a real estate developer who was older than she was, and he had passed away, and she was, being the spouse, had inherited kind of his assets. And she was working because previously, when she was married, she was getting benefits through her husband and his job and his company and those types of things. And she was really worried about the cost of health insurance, and so she was working as a barista at a coffee chain so that she could get benefits. She also loved coffee. And it was interesting because her net worth at that time was right around the range of $20 million. And I asked her, what is it like to have all this money and then be working with a lot of your peers who maybe are there specifically for the money? And she said, she understood that. She came from humble beginnings. And it was funny because she told me that she would park her Lexus in the parking lot that was not adjacent to their store, kind of as far away she possibly could, because she didn't want to run into any of her coworkers, driving in with a nice car. She wouldn't wear any of her jewelry into work or anything like that. She didn't tell anyone about her money or where she lived or any of those types of things, and in some ways, I was, taken aback a little because, I think in the current society, a lot of this is looking big, having an image about your life that exceeds your capabilities in some cases. And I appreciated the fact that, Julie had, the means, but didn't feel the need to do that. And I was actually very cognizant of how people live. And, and I think actually working at the coffee place gave her good perspective and kind of reminded her of what would come of or where she came and what people are doing to try to get themselves out of their own position. So, interesting thing is she still works there. She enjoys it. She gets some free coffee, makes some money, and gets her health insurance. The next one I'm going to talk about, only two more here, is the tax dodger. And this title is pretty much what it sounds like. So Alice called in because she had some tax problems. And it turned out, as we dug into it, that she had not paid taxes for years. She'd sold some properties, earned income, never paid taxes on it. She was getting hounded. She was being subpoenaed, all these things. And she was basically working for cash. She had set up a fake company so that she could bill people, so that she could deposits into a bank account where she could get cash because she needed money to live on. Um, and it was just a bad situation. And to me, one of the absolutes that I work with is that you have to have your ethics under control. You have to have some, and this was clearly a problem. And I get it, and I'm not trying to say that Alice was a bad person or anything like that. But I told her, listen, you have a tax obligation. I get that you don't have the money. I get that they're coming after you for your taxes, but this is something that could ultimately land you in jail. I mean, this is something that is very serious. The costs are obviously going to continue to creep up with penalties and interest and all these other things. I mean, this has to be a top priority to fix, not to figure out a workaround and try to kick the can down the road. And so we didn't meet very long because actually after the first session, I gave her some things that she really had to do. And that was, talk to her. She had actually moved accountants a couple of times because the accountants kept telling her some of the same things that I was telling her. And she didn't like those messages. And I said, listen, you got to go back to your previous accountant, the one that told you about this, and get some professional help on what you should be doing, because you are going to be much better off by working with the government on this than to try to avoid them. And when we spoke the next time, she hadn't done any of that, and she had come up with some other plans of how she could get her hands on some cash to pay bills again. And at that point I said, listen, this is not the type of relationship that I have with clients, and it sounds like you want solutions, but you don't want solutions that are correct and in ways maybe even easier than what you're doing right now. But this isn't a relationship that we're going to be able to continue on with. It's not something that I'm going to be able to help you with. So we ended up parting ways, and I don't know what happened to Alice, and I hope that she went back and got professional help, legal help, accounting help, to get that resolved. But right out of the gate, it was pretty obvious that long pattern of bear had put someone in a really bad position. The last one I'm going to talk about here is called the retirement worrier. And so I got a call from a gentleman, Bill. He was in his late 40s. And, usually when someone's setting up an appointment, I'll ask, hey, is there something that's top of mind for you? Some kind of issue or question that you have? And, because I like to try to be a little bit prepared going in, not necessarily being ambushed. And his comment was, listen, I have nothing saved for retirement. I'm kind of worried about it. Work is drying up for me a little bit. I'm not nearly as busy as I was. And so, I'm trying to figure out what I can do. And this is a story I've heard a lot, and to be honest, early 40s people thinking about this is at least a good position, because we have some time to work on it. I've had people come in their late 50s and late 60s saying they have nothing saved for retirement. So nothing about this kind of raised any red flags. But Bill comes in and he sits down at my desk, and we're talking about, okay, so you said no retirement savings, that's kind of a big concern. He's like, yeah, I'm not sure, what I'm supposed to be doing. I don't have a retirement account set up. I do have a bunch of money in cash or in my savings account that I should probably be doing something with. So, again, just to get a frame of reference here, what do you have? And so we start doing the inventory, and he starts reading it off, and he's got his statements, and he's telling me, all right, in checking, I have about, I have 2, and in savings, I have about 15. And then I have some, basic investment accounts with 25, and I have some other miscellaneous accounts on a savings account with 1, and blah 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 blah. And we're doing all this, and I'm writing 1 and 1.5 and 2 and 15 and 10 and ultimate. And then when we're done, I look up at him and I say, thousands, and he says, no, millions. So as I'm doing the numbers there, instead of what I thought was a total asset inventory of $40,000, it ends up being an asset inventory of about $40 million. And I think it was $10 or $15 million he had in his savings account at that point, earning nothing. So it was kind of an interesting situation, because even I, get surprised sometimes, upside or downside, both. And, we kind of talked about why that actually could be a good thing, that he doesn't have anything in a retirement account, that, he's been paying capital gains tax, which could be a lower rate for him overall. And so, it wasn't something that he probably needed to be mortified or paralyzed about, that he was in a pretty good position. Yes, his income was slowing down. The work that he was doing was not quite as lucrative as it had been in the past. He was in technology, developing software and things like that. But the good thing for him is he's going to be in good shape if he manages that money all right. Ultimately, we just kind of talked about his situation. I think again brought his blood pressure down. Just and when I say that, not literally bring his blood pressure down, but maybe, but just kind of talking about working out some of the stress out of where people are at that. They probably don't need to be overly stressed about it. I educated him on some different types of accounts that he might consider, replacing his savings with. Ultimately, made some referrals, I think, to Deutsche Bank and Credit Suisse and UBS or whatever, some organizations that he was going to go out and interview and see what they could do, what they could do for him. Ultimately, I think he used, I educated him on like what SMAs and some of those types of accounts were, and I think he ended up setting up, 4 or 5 SMAs with those assets. So again, kind of goes back to my other video about why you should have some referral partners or at least know what some of these accounts are to educate them. Again, not to recommend them because there will be professionals that manage them and are licensed to, but he had never heard about them before, and as far as I could tell, they were going to be the right fit for what he was trying to accomplish, and also give him some professional guidance on a fair amount of assets that I think you want something out for on a regular basis. You are not going to be looking out for them on a regular basis. So those are my stories: the couch potato, the balancing act, the beneficiary, the barista, the tax dodger, and the retirement warrior. So hopefully those are interesting to you. Hopefully maybe some of the lessons are, you never know what to expect. You never know how people are going to react to very different circumstances, and for us, we can just get a wide variety of interactions with clients. And what I'm hoping is that we will go into things open-minded and flexible like water, and bend and adapt to all these types of situations, as well as be open-minded about providing the education, staying in your wheelhouse, and referring out, if things become out of your area of expertise. So that's it. I hope that's helpful. I will see you guys later.